Wonderful. All right. So let's see. We're getting ready here. He's about right. Okay. All right. Well, we're going to get started maybe a moment early. We've got people logging on as we go. So I'm Jonathan Scott. I'm one of the owners of Keystone Financial Resources. And welcome to each of you for this webinar of Women's Retirement Roadmap. And we're going to cover some good topics tonight. There's a lot of people viewing. Goodness, it looks like over 90 people, so that's exciting. So hope this will be informative to you. We're going to jump right in here. I've got a disclosure to go through, so we'll have to put that disclosure up. Have to leave it up for a few seconds, 3, 2, 1, so we can pull that down now and keep going. But tonight we're going to be talking about some specific risks and challenges associated with women retiring. And that draws really a couple of questions out there. Already, you'll probably be asking yourself, well, what challenges do women have that are specific to women that men don't have? And the reality is the main challenge is driven from the fact that women are living so much longer than men. If you think about it, and I'm going to wait just a moment or two, I've got a couple of people, the numbers are still climbing here getting on, but one of the statistics that really should ring home to each of you out there is something that Glenn and I have been knowledgeable of for years and years. And it's the fact that 80% of men die married. But did you know that 80% of women die single? Okay. And that's a huge statistic that creates a whole lot of issues for women in retirement that men just never see. They're not around long enough to see them. So we're going to talk about those tonight. You may be asking yourself, why are two men so passionate about helping ladies with these challenges in retirement? And I will tell you that that's really culminated over time, more than a decade for Glenn and I together in this business, but much past that. In my personal life, that passion was really formulated in watching my mother. I was a product of divorce, but the divorce that my mother and father had, it really wasn't a very normal divorce. It was more of an abandonment. And I really watched my mother through that time go from being a homemaker and having everything taken care of in a very secure home to suddenly having to become the primary breadwinner and having to get out there and take care of her children on her own and earn a living. And I just saw all the challenges and the anguish that came with that. And it had a very strong impact on my life very early on. In fact, my mother still works with us today, a very pivotal part of my life and what we do, but had a great influence on me wanting to make sure that the women that I'm able to touch their lives, that they know that they have somebody in their corner that is out to protect them, to take care of them, to make sure that they retire on track, that a lot of these pitfalls don't jump up and grab them. For Glenn, his grandmother was very pivotal in his life and really influenced the reason why he became an advisor to begin with. And so both of us have had powerful women in our lives that have helped shape our lives. And over the years in our company, just organically, Glenn and I have been blessed. We've had great connection with a lot of ladies groups, and we got connected in very long time ago with a ladies golf group, and then a nursing group and teachers group, and on and on and on until over the years we've built this wonderfully large clientele of women that are single, widowed, or divorced. And so they challenge us to continue bringing items forward all the time and really talking to women about the pitfalls that we see out there that men are not facing that women really need to be aware of. So that's how we got to where we are now. So one of the things I want each of you to do, I'm seeing now lots of people logging on. There's several just coming on now, but I want you to hang on here for a little while. I've got a story that I want to tell you at the end of this webinar that is really a passionate story that has led us in the culture that we're in now in our company. It was really pivotal to us at the time that it happened. I want to be able to share it with you, so hang in there with me. I'm going to move quickly tonight, but I want to share that with each of you. So let's jump forward here. And in retirement, if we think about our retirement, our financial lives can really be likened to a mountain climb. Okay. So in pre-retirement, we're spending most of our time going up the mountain, and that's the accumulation stage of our lives. And you've all heard that before. But during this accumulation stage, you're really spending about 90 hours of your total lifespan, 90,000 hours, I'm sorry. But you're spending about 90,000 hours in this accumulation stage in the years that you work. So if you do the math on 35, 40 years, 52 hours a week, 40 hours a week, that's the number you're going to arrive at. It's a lot of hours went into creating what you're going to retire on. Now, once you decide that you're going to retire, you'll spend the rest of your time in the distribution stage. And that's a very pivotal stage. And when we ask people for the first time, what's the most important question to them concerning retirement or financial planning? For so many of you ladies, it's centered around security and wondering if it will really be enough. And you ask that question in multiple ways. Will it be enough for me to last me all the way through retirement? Will it be enough that I can retire the year I wanted to retire? Will I have enough to experience retirement in the way that I wanted to experience retirement at the level that I wanted to experience it, what I dreamed about? And it's our job for Glenn and I to help you achieve those goals and to help you to avoid the pitfalls. Because remember, if we're mountain climbing, right? Climbing up the side and then climbing back down the mountain, the most injuries that happen in mountain climbing do not happen on the ascent. They happen on the descent. And so if you were mountain climbing, you might choose to have somebody help you along the way or choose a guide. And incidentally, that's what we do, of course, but only 17% of people that are doing the mountain climb choose the guide. Only 17% of investors out there, ladies, actually choose to have someone help them with this journey into retirement. Now, when you look at that 17% and you look at the statistics, that means the rest of the people are trying to do this on their own. But when you look at how do people that are using advisors compare as far as their gains and things like that in the retirement stages, how do they compare to the ones that tried to do it themselves? The ones with the advisors fare much better. And so really when you further look at it and you say, okay, well, out of the different things that I can outsource, what is one of the cheaper things that I can outsource and really get some help, some meaningful help in my life with the things that I have to do in retirement? And one of the best things that you can do and one of the least expensive things that you can do is have somebody out there helping you with your investments, with your retirement planning. And we're going to talk about that. You don't want somebody that's just helping you with the investments. I've got several reasons why, so hang in there and I'm going to talk to you about them. Now, whenever you retire, there's a lady kicking her heels up, and I hope each of you get to kick your heels up. But every one of you ladies out there are going to get to experience some things. The one that everybody's going to experience is you're all going to get to kick off your retirement. We don't know what year yet, but you're going to get to kick off retirement. After that period, you're going to go into either two categories. You're going to be in the category where you're kicking yourself that you didn't do more on the planning stage and you didn't save more for retirement, or you're going to be in the group that's kicking it up and enjoying the life that they planned for. And again, it's Glenn and I's job to try to make sure that every single person that works with us is able to be in that category of kicking it up and enjoying the retirement plan that's been created for them. And the really neat thing that we're able to tout in our firm is not only do we have a 99% retention rate after all these years, people seldom leave here and go to another company, 99% retention rate, but we have a 100% success rate in the plans that we've created. Not one of those plans has ever failed. So we want to make sure that each of you listening has an opportunity to be in that second category, okay? So now, 3 retirement realities. These are great statistics. I'm going to spend the next 2 or 3 slides talking about statistics with you, but this first one is kind of sad. 49% of women out there retiring are fearful that they will become homeless and that they will become financially broken. And so they're worried that they'll be moneyless and homeless, 49%. And these retirement statistics came from a Transamerica study, by the way, if I'm giving the source. But 90% of women out there are realizing that they should have put more emphasis on their financial planning and their retirement planning. So that's interesting. 90% of women identify that this should be a bigger priority to them. Well, of that 90%, again, it's going to break into 2 groups of ladies. There's going to be one group that's going to identify that, yes, that's me. I should be doing more and take a more active stance in my retirement planning and my investment planning, financial planning. But they're going to end up freezing up and going into analysis paralysis, and they'll end up doing nothing. That's one group of the 90%. The other group of the 90% is going to recognize that they should be doing more, and then they're going to take action and do something about it. They're going to begin seeking out that guide to help them. They're going to begin taking control over those monies. They're going to begin doing some planning and looking at things realistically. So if you're in that 90 percentile and you're identifying that, hey, I should be doing more, ask yourself which group you want to be in, the one in analysis paralysis or the one that takes action, okay? Now, the 44%, what is that? Well, 44% of American women are either widowed, divorced, or single. 44% widowed, divorced, or single. Now, for those of you ladies that are out there listening and you're married, okay, there's a high possibility that in your lifetime, you're going to end up in one of the other 3 groups. So really think about that for a minute as we go through here. Don't exonerate yourself if you're in that wonderful marriage relationship. That's fantastic. But the reality that you could end up as single, widowed, or divorced is a very big reality. And so this message is going to apply all the way across the board. And it is one of the reasons why Glenn and I are so passionate about bringing this message to you, ladies. We want to be a megaphone out there in the marketplace because we see this on a daily basis and we are committed to making a difference out there. So I hope you guys can get that. Now, there are some unique retirement risks out there. So again, according to this Transamerica Center for Retirement Studies report, 12% of women are very confident in their ability to retire fully with a comfortable lifestyle. 12% of them. They're very confident in their retirement plan that they can retire confidently in the lifestyle that they planned on. Now, 53% of women think that they're going to have to work past age 65. Okay, 53% work past age 65. Now, this next statistic really ties back into the first one. 1/3 of women, in fact, a little bit less than a third, but only about a third of women are utilizing an advisor to help them in their investment planning. Now, if you look at that, if a third of the women are using an advisor, but only 12% are confident, there's a problem, okay? And that means that all of the third are not confident with the person that they're using, and they're not confident in what planning has been done around their retirement. And that is for a very practical reason. The majority of the industry out there has people working in the investment industry that are more or less investment professionals under the suitability standard, meaning that the things that they tell people are just suitable for the masses. It's kind of a cookie cutter approach. What you ladies want out there is, if you are looking for a guide and you want to be in that 12% that are really confident, you need a guide that is a fiduciary. So when you're out looking for advisors, make sure you're working with a fiduciary. When Glenn and I licensed as fiduciary standard, that means that the things that we prescribed to our clients have to be to their best interest above Glenn and I's best interest. And you would think, well, that's the way it should be. I thought that was the way it was industry-wide. Not so. The majority of the industry is still suitability standard. You want a fiduciary. You also want somebody that is compensated in a manner to they only do better in their compensation when you do better. Okay. So it's very important that you know how that advisor is compensated, and you want them incentivized to help you do better. They should not be making more money while your money is going down. Does that make sense? Okay. So let's jump ahead. Got a lot to cover tonight in a short time. Women's retirement savings statistics. So, will more women or men aged 65 plus end up in poverty? And the statistics show that 80% more likely for a woman to end up in poverty than a man. And we'll talk about why that is. What's the cost of women's versus men's retirement health care? And for ladies 65 and over, it's about $155,000 once they're past age 65. For men, it's only about 120 to 130. So, ladies, again, because you're living longer, typically your health care costs are more than the gentlemen. And who saves more for retirement, men or women? I'm seeing a lot of people responding to that, but who saves more for retirement, men or women? Well, the statistics show that women save 43% less for retirement than men. And a lot of that has to do with some of the next slides we'll talk about, but it has to do with the women's earning potential. And a lot of times that's affected for the ladies. You ladies out there, you're the ones that choose, and rightly so, my wife did as well, to stay home and actually raise the children. That is a sacrifice that you've made. And it's a wonderful sacrifice. It's an investment into your children and your family. But when you do that, the earning potential goes down. Now, I'm a proponent that you do that. We just need to strategize for it. And so you need to be aware of these challenges that arise because of it. Now, when we're talking about Social Security, it is one of the ways where this really shows up, the topic that I just spoke about on the last slide, where you've taken off some years to raise children, or a lot of times women will become a caretaker, and not just of their spouse. Many times a lady becomes a caretaker of their spouse's parents, and she has to come out of the workforce often to do that. And so you ladies, hats off to you, wonderful caretakers. And there need to be some allowances that we take into the planning for the fact that you do this. So in Social Security, this is a way that we can really take a little time out, show you some ways that you can maximize the Social Security, optimize it for yourself, and to be aware of some things as you're making selections for Social Security. So the first thing I want to cover is the impact of the zero earning years in work history. You need to know some things about it so that you can help calculate some things for yourselves. Divorce and widowed survivors benefits. This is an area where Glenn and I educate ladies consistently. So I'm going to try to give you just a couple of tips tonight that will help you in making decisions down the road around your Social Security. And then finally, inheriting your spouse's benefit. That's great, but there's some challenges around it. And for most of you ladies, again, if you're married, most of you will end up inheriting a benefit, most of you. So let's talk about these things very quickly. This is a great chart of Mrs. Jones' earnings example for Social Security, and it's showing that Mrs. Jones took 7 years out of work to help raise children. Well, how did that affect Social Security? Well, Social Security is figured based on a 35-year work history, okay? So it's the top 35 years of your work history. So if it's looking at several of those years as 0 years, they're counting in, much like you used to do averaging on your tests and things. You remember what a 0 did to the overall average. For every year that you work further, one of the 0 years comes out of the equation. Now, it's important to know that because you might be 2 or 3 years off of work and be deciding, hey, I'm liking work. I don't feel pressure to quit, but would it make more sense for me to continue working the next couple of years or go ahead and take Social Security now? Eliminating these 0 years is going to factor into that equation and that decision for you. So you just need to be aware of how it's figured, the 35 best working years. Now, the highest working years. Now, on this slide, I wanted to just quickly, and I know the numbers are small, but you can see the averages on there. On the left is Mrs. Jones, on the right is Mr. Jones. And when we're looking at the different potential in the earnings, I just wanted to show you that 7 year time span of Mrs. Jones taking off and not earning income during that 7 years not only affected her then, but it affected her on accumulation. It also affected her as far as what her lifetime earnings would be on Social Security. Her benefit is going to be much smaller than his. It's important to know that the earnings potential typically for ladies is less than gentlemen, and it is because in the traditional roles they have taken off years to take those pivotal positions of raising a family or being a caretaker. This is one of the reasons why Glenn and I want to bring these challenges forward, because frankly, if you remember the statistic I started with, about 80% of men dying married, but 80% of women dying single. These guys, they're not around to know if the plan worked or not. And she's the one that's around that is managing things after he's passed, and there has to be money to manage. And if we haven't been really diligent about these decisions being made, even collectively around which Social Security to turn on first and what combination to utilize, we're going to miss the boat there. And Glenn and I are dedicated to making sure that you ladies do not miss that boat. All right, so let's talk about widowed and divorced benefits for a moment. This is something that Glenn and I are consistently educating ladies on, and they don't realize. If your spouse were to pass and you found yourself a widow, you could begin taking a survivor benefit if you have children even earlier, but you can take your survivor benefit at age 60, as early as age 60. Now, one of the things that a lot of ladies don't realize is that the survivor benefit pot with Social Security is a different pot of money than their own personal benefit. And so, ladies, you could begin on a survivor benefit as early as age 60 and allow your own benefit to accumulate up to age 70 and then switch over to your benefit at age 70 if you wanted to. And a lot of ladies don't realize that they've got the ability to do that. So they don't have to stay on the survivor benefit, and their own benefit is still accumulating at 8% per year. And if they remarry, the survivor benefit doesn't go away. And so this is something that's so important that ladies need to realize about the pot of money in that survivor benefit. The divorcee benefits. This is a fun one a lot of times because ladies didn't know it and they ask the funniest questions around it. So I'll try to cover a couple of those. But in the divorcee benefit, when you're married for 10 years or longer, you inherit a portion of your husband's benefit at that time, okay? Even if you are divorced, you still, after you were married for 10 years, if you've been divorced for 2 years and you've not remarried, you are able to claim your ex-husband's benefit at 50% of it as a spousal benefit, okay? So there's an ex-spouse benefit out there. Now, the only stipulation is that your ex-spouse has to be eligible to collect a benefit as well. So he has to be 62 years or older. Does not have to have already activated that benefit. So ladies, you can turn on your ex-spouse's benefit and they will not even know that you did it. It's a part of your benefit. You don't have to consult them. It's yours to do. Now, one of the funniest questions I always get is, will it damage his benefit? And unfortunately, and that that could be the case, or maybe it's on good terms, but Unfortunately, it has no effect on the ex-spouse's benefit whatsoever. One of the other funny things about it is, ladies, you always want to marry up, okay? Because of the ex-spouses, you can choose the higher one. And so for those that have had multiple marriages, you can actually choose the higher spousal benefit. So, the other thing that I would point out to you, though, is that if you do remarry, that spousal benefit goes away. And, ladies, unlike the widowed benefit, on the ex spouse benefit, you either choose your benefit or the ex spouse benefit, whichever is the larger of the two. You don't get to revert, okay? Now, longevity of men versus women. The basis of this slide is that on average, women are outliving men a minimum of 5 years. Now, down at the bottom of the page, 1 in 4 ladies are going to live beyond age 90, and 1 in 10 are going to live beyond age 95. So I had a grandparent that lived to age 97, and that's happening more and more as we carry forward. So 1 in 4, 25% of you ladies out there of the population right now that's 65 or older is going to live to age 90. And that means we've got to do a lot more planning. In your parents' lifetime, they were only planning for ages around 80, 77, 80 years old. And still the averages of women are at 82, but 1 in 4 going to age 90. So much more prevalent today for people to be in their 90s. Okay. Now, this slide, I really like this slide because it says 61% of women are responsible for their financial retirement. So, of all the ladies out there, we need to be talking collectively because 61% of them are responsible for their financial retirement. But that 39% married down there, again, you need to realize that that percentage still has some big things that they need to be cognizant of and they need to be aware of. So oftentimes we'll see a couple come in and the lady will let the gentleman really take control of the finances, really have done a lot of the planning. And the reality is she needs to be very comfortable with it. One of the things that Glenn and I will often ask these couples, if he says, well, I usually keep up with the investments and I do all this and I do all that. And I'll look across the table and I'll say, well, that's wonderful, Jim. But if you were to pass today, is Mary as comfortable with it as you are? And that really gets them thinking and they think, no. And Mary looks across the table and she thinks, I should be, but I'm not. And the reality is we got to get Mary involved. She's got to be really taking a driver's seat a lot of times because it's going to be Mary that lives this plan out 9 times out of 10. So we really want to talk to folks, but in that 39% married bracket, there's some things that you need to realize that when your spouse passes, you're going to go into a higher tax bracket than you were in when you were married. Okay. If you're single, you were already there, but married filing jointly is allowing more income in that bracket than the single tax bracket is. So right off the bat, unfortunately, your spouse passes and you're now paying more taxes than you used to because you're now in a single tax bracket. The other thing that a lot of folks don't think about is, especially when gentlemen want to trigger their Social Security benefit early, many times it was the bigger benefit between the gentleman and his spouse. And when he passes, she's going to lose her benefit and she's going to take the larger one. And if he turned his benefit on too early, it's just not going to be enough because one of the Social Securities is going away. So we really want every one of our couples coming in, if they're married, to be thinking about what is the spousal plan, because one day the possibilities are high that she is going to be widowed and one of those Social Security benefits is going away and she's in a higher tax bracket. So the other thing that happens that we see a lot of that places a big challenge on the ladies out there is that If there was a pension involved, oftentimes the gentleman has not thought it through, or like happened maybe about a week ago, we had a lady come in and she practically drug her husband in by the ear, but she said he was about to turn on the single payout benefit, and he worked for one of the auto companies. And had he done that, she would not get anything once he passed. Now, it would have been a bigger payout and it was enticing while he was alive, but it would have gone to zero the moment he passed, and that would have affected her very, very negatively. So we really need to look at and be really critical of how we turn these pensions on if the pensions are still out there, because we want to make sure that she's left with something after he passes. And lastly, what a lot of couples don't realize in that 39% married bracket is that when he passes, if he's had the higher earning potential and he's built the bigger 401k or the bigger IRA, when he passes, that becomes either a beneficiary IRA or it rolls over and becomes a part of her IRA. And now she has to take distributions on it. Okay. And again, remember, she's got to take distributions on it and she's in that higher tax bracket. And so a lot of those monies could go away to taxes very quickly. And so we want to be thinking about those things early on so that when those things come up, we already have a plan in place. We've been working towards that for years behind the scenes, and we know exactly what to do. Okay? Now, let's look at very quickly taxes. You know, the hardest thing in the world sometimes to understand is the income tax. So that was a quote from Albert Einstein. And I will tell you, Glenn and I are neither Albert Einsteins nor tax professionals. Okay, so we're not CPAs. But what we are is investment advisors that have been working in tax strategies for many, many years. And frankly, if you do something a long time and you do a whole lot of it, hopefully you get pretty good at it and you get better every year. So Glenn and I look in cases very diligently, helping ladies develop tax strategies for down the road. And what I would tell you that I hear from most of the ladies that will talk to Glenn and I, they'll say, you know, I would hope to get some tax strategies around my investments from my accountant, but really he functions more as a tax preparer to me. And I would say that that's true industry wide. Most accountants out there and tax preparers, they base their business on volume. And past telling you to make a Roth contribution or an IRA contribution for the year, they don't have a lot of time to help you strategize tax strategies in and around your investments because they've got three waiting in the lobby and they're trying to do 2,500 tax returns at tax season. And so where you would think, well, gosh, I should be able to get good tax strategy advice around my investments from my accountant, the reality is it's just not logistically possible. You need somebody in your life that knows the tax strategies in relationship to the investments and can really help you strategize things along the way. It will save you a lot of money. I'll submit it will well pay for having somebody help you and assist you in your life in both the monies additional that you'll make and the monies that you'll save and the monies that you won't lose and just the security and the peace at night. Okay. Now, this new Secure Act that passed this year, it moved your required distributions. For those of you that don't know what that is, for your 401ks, your IRAs, your SEP IRAs, 403Bs, 457s, even your TSP savings plans, the government lets you accumulate monies in those tax deferred, but there's a catch. Starting later in life, they require that you begin drawing out of those monies and they require you to pay taxes on it. Now, two things we know about that. We know that taxes down the road are probably going to be higher than they are now. And the second thing is we can do a lot between now and age 72 to lower that effect. But at 72 years old, for all these qualified monies, you are going to have to draw off of them. And if we've not done some help in there and helped you strategize, you may have to draw more than you wanted to. And that's a problem. We have lots of folks that will come in and they wanted to live at one lifestyle, and maybe they had a $8,000 a month lifestyle, but the government is suddenly making them draw $11,000 or $12,000 a month, and they're having to pay taxes on the extra. We want to make sure people aren't in that situation. Okay? Now, do Roth conversions make sense for you? That's right along the same subject I was talking about a moment ago. These tax brackets that we're in right now, these are the lowest tax brackets we've been in since the 1920s, ladies. And so what I would tell you, if you had a takeaway about taxes tonight, it would be you've got a wonderful opportunity out there right now to do some tax planning that's going to save you huge money in the future. We have great software that we can help you calculate, hey, how much would it be feasible for me to move from my IRA into a Roth IRA that'll be tax-free forever? What's feasible for me to move each year and not pay a whole lot more taxes on it, but have tax-free money down the road? And so this is a wonderful strategy for so many. And people's first question is, how much should I move? And that's some calculations that have to be done. But your takeaway right now needs to be, we're in a wonderful tax environment. We've got till 2025 to do some great tax planning. Even after that, it's just that right now we're in some extremely low tax brackets. So make sure that you have somebody helping you in your life do some tax strategies. Now, this piece on healthcare is so important, because I tell people, and Glenn tells people, that you've got to have this healthcare plan in place, and you want somebody in your family to know what it is and how that you've proposed to be taken care of later in life. You know, the fact of the matter is 70%, 7 out of 10 of people that are 65 or older are going to need some type of long-term care. And typically, for the ladies, the average is 3.2 years that they'll spend in a long-term care facility. If they do need the care, 3.2 years of care. Now, if they have Alzheimer's, and that's not on here, but the average Alzheimer's stay is 7 years. My grandmother went through that. Glenn's mother-in-law is going through that right now. So that's near and dear to our hearts. We have seen Alzheimer's patients, and that really runs the care costs up. So you want to have some things in place early on. Now it talks about 65 and older, 15.2% of them will spend over $250,000 on long-term care. And I wanted to show you that the average cost of a private room right now in a qualified facility is about $90,000 per year. So, you know, do the math on that 3 years, and you're up nearly to 300,000 on the 3.2. And so when I'm looking at that, I'm saying, gosh, there's a lot of different ways to skin a cat. What you ladies need to take away is we need to do some planning right away. This needs to be done all along the way. So for a lot of you ladies that are out there working right now, a lot of the companies offer great plans that, just like you contribute to your 401k, you can contribute to some portable long-term care insurance down the road. If that's not feasible and the cash flow is not there, then we can look at some legal documents to at least prevent the government from depleting all of your assets to pay for long-term care. That way we can protect some assets for the children down the road. That's done through way of some trust documents. For those of you that have some nice investment accounts and did not have the opportunity to build things through a company as you were working, we can certainly turn around and do some types of coverages and things, not necessarily long-term care insurance every time, but there are new products that are coming out every day, some of them investments that actually have some long-term care pieces built into them. It is one of the areas that the government is actually incentivizing companies to come up with ways in the private sector to help people have long-term care, because the government doesn't want to subsidize it. So that's actually a positive thing that's going on industry-wide. You ladies just need somebody to help show you what is available out there and how you can build a plan over a long period of time that will be there for you down the road, ready to go when you need that care. Now, this last piece I want to cover with each of you tonight is on market correction. And this could be one of the most important pieces that we cover for the evening. So in market correction, This is what wipes out more 401ks, more 403bs. You know, when we moved as a country and our parents had pensions in their companies and people corporately and institutionally took care of this large pension fund for these companies, we moved to the 401k. And yes, it put the freedom in our hands to manage our own retirement and manage our own 401ks and put monies into that plan instead of a company pension plan. The issue is most people are not good managers of the 401k. It's not their forte. They're busy working. It was a system that really failed to see that people were going to be busy working, busy doing other things, and actually working in and around managing what was going on in their 401k was going to be something that most people did not have time to do properly during their working years. And the help that they get from the company representative that comes around is sparse at a lot of companies and only happens once or twice a year. So there's a lot of things that can be done on the interim, and there's a lot of things that you could be doing proactively right now. And I want to talk about them for a minute. 4 things to do during a market correction. Okay. So we just went through a market correction, and this should spur a lot of you ladies on to doing some things right now because we just had a correction. We're in a very volatile time right now. One of the things that we want to encourage people to do is not to get emotional. Okay. What we saw happen in this crisis, this COVID-19 crisis, was so much likened to like a 9/11 event where we didn't know the trade towers were going to be bombed. There was nothing wrong with the stock market, but suddenly the trade towers were bombed and stocks fell so hard that, if you'll remember, the government had to close the stock market down. No trading could happen for quite a while. Planes were grounded. All the planes had to be on the ground. There was no travel. So we didn't issue stay-at-home orders during that time, but travel was certainly curtailed during that time. Very similar thing happened with COVID-19. This period of time that we went through, though, was a very emotional sell-off. Strong economy. Things were going well in the economy. COVID-19 came in. The market began to go down and adjust for it. And then people began to rapidly sell off broadly. Didn't matter what they were selling it all. And the market took a very steep dive very quickly. And then it reached the bottom. This time around, it was very fortunate that correction began very quickly after. And then the government was pouring stimulus in. So we saw this correction take place and happen in a really meaningful way in a short period of time. And that's wonderful. But we want to encourage you ladies not to get emotional. If your portfolios are set up correctly, they're diversified well, and they're allocated proportionately, you shouldn't have to be emotional about the trades. You shouldn't be panicking and selling at a low point. And then oftentimes people emotional again, they won't want to buy back in until they really feel like very confident that the way is clear. But after that period of time, they've missed a lot of growth opportunity. And so that's how people lose a lot of money. We want to make sure that that doesn't happen. We just saw that happen again a couple of months ago to the industry as a whole. But the wonderful, encouraging thing was for our clients that did not happen. We did not have anybody panicking. So one of the other things that I would tell you ladies is that while I'm on the topic of COVID-19, it should have spurred you ladies on to getting things in order. You know, really knowing where your accounts are, what's going on in the accounts. For the married ladies that are listening out there, think about this. We're going through this COVID period, and unfortunately, COVID deaths in the retirement population, they happen very, very quickly. And if your spouse was to contract COVID-19 and pass in a short period of time, do you know how everything's working? Do you know where everything is at? Do you know where all the accounts are and what the plan is? And if you don't, you should. And now's the time to get prepared for that. So I want to encourage you. For you working ladies out there, ran into a physician coming in and calling me a couple of weeks ago, found out she had 4 qualified plans at other hospitals. She's a very a high demanded physician. She's done a great job at what she's doing. She's helping a lot of people, but her mind has not been on these retirement accounts, but they amounted to a lot of money. And she said, oh yeah, that's still at such and such hospital. That's still in such and such facilities qualified plan. And we're helping her right now gather those up, but she didn't really even know what the amounts were. She hadn't looked at some of them in years because she's been working, making this living that she's making, and it's a great living. But frankly, these retirement funds out here are very important for her as well. So take this as a time to get your ducks in order. Understanding your risk is one of the most important things we can talk about. So ladies, if I ask the question of you right now, if a market correction takes place again tomorrow and it goes down 25% in the market, do you know right now how much your accounts are on target to go down for if the market as a whole goes down 25%? If you don't know the answer to that, you need to know the answer to that question. You need to be able to confidently say, oh no, my accounts will only be affected by 10 or 12%. We've stress tested those. We already have a risk analysis done. I already know what would happen if that happens because it's already been tested on my accounts. If you don't know that, you need to. One of the things that Glenn and I are able to provide with each of our clients is a wonderful stress test and a risk number and a risk analysis. And it tells them on a scale of 100 where they fall risk-wise, but it also does a wonderful stress test on their accounts and shows them exactly what percentage they could expect their account to be corrected if a 20, 25, even 40% correction came along. And so you want to know that. And it's easy to be able to find out, but it's also 90% of the women that find it out for the first time are shocked to find out that they were in a different position than they thought they were. And so this is a very different number than asking a broker to put them in a 60-40 portfolio. Okay. This is a number to actually show how much of my accounts would go down. So if you don't know the answer to that question, you need to. If the market corrected tomorrow, how much will your accounts go down? Now, the next point is acting your age. And that's a funny one just talking about. So many times we'll have ladies come in and they'll bring in their statements. And when we look at their statement, they'll be 5 to 10 years away from retirement. They may be 50 years old. And we'll look at the statement and it looks more like a 30-year-old. They've got things adjusted all in equities very aggressively. They were trying to catch up for lost time. We never know. But we want to make sure that the allocations are correct. And we want to make sure that you're allocated appropriately for the age that you are and your time horizon on when you're going to retire. Obviously, if you're 5 years away from retirement and you get too aggressive and you lose too much in a market correction, you're not going to be able to retire when you want to. And so we've really got to be careful and make sure that you're allocated appropriately for your time horizon and your age. Now, creating this actual plan. I tell people that this actual plan, it needs to be very comprehensive. You know, when Glenn and I create a plan for folks, we create a plan that concentrates on 5 areas, and it's comprehensive and cohesive. So we want to create a plan to where we're doing the income planning and it's in writing. We want to make sure that the income planning is worked right into the investment planning so that, again, that investment account is stress tested and we know that the income plan is not going to need to change because of the investment plan going through a market correction. Very important. Then we want to help them in their tax planning. And if they don't have an accountant, we have tax professionals that we work with here. We'll get them set up with that person. But regardless who they work with, we want to be speaking with that person as well so that the right hand knows what the left hand is doing. And we're making good decisions that are very tax efficient for that client. We also want to be putting together that health plan, and we want to be talking and putting together, finally, the legacy plan on the legal and working with whoever their attorney is or them working with our attorney to make sure that as much of the estate bypasses probate as possible because Tennessee is a probate state. So for many ladies out there, it is the first time that they have ever had anybody working with them that is working comprehensively with the other professionals in their life, and they're making sure that there's accountability there, and they're making sure that the right hand knows what the left hand is doing. So it's something unique that we do. It's something that we really believe that we shine at. It's something Glenn and I are truly passionate about. This is how I spend my life, and I love it. So let's talk about this story that I saved back here for the end for you ladies. This is something that changed Glenn and I's life. It changed the culture of our company. We had a client a few years ago, and this client had a son in the military. And this son went over to Afghanistan. We get to talk to the client occasionally about their son, but something tragically happened while he was in Afghanistan. He was in a terrible accident while he was serving, and many months went by when we would just check and find out that he was doing better and he was healing, and we would get good reports. But one day he came into the office with his mom, and when I saw him for the first time, I remember talking to Mark, and I said, tell me a little bit about what happened, Mark. And he said, well, while we were over there, he said, it was my job to go forward every day, and I'd get in a Humvee and I would go out into the desert, and we would push forward at where the mission was for the day. And I would go and I would check those sites, and I would use my binoculars and look out over the different areas and make sure that it was going to be safe for the rest of my battalion. And then I would report back and go back to the base. And he said, this particular morning was pretty much like every other morning, except that there was a couple things that I remember. And he said, I remember praying that morning that when I went out that I would be protected. And he said, that morning we went out, and I got out of my Humvee. He said, I had my helmet on, I had all those things ready to go. And he said, I walked forward with my gun in the desert. And he said, I went to the left and I heard a click. And he said, it didn't register right at the moment that I had stepped on a landmine, but within a short second, he said, I remember that I just heard a large boom. And he said, I don't really remember anything after that. But he said, apparently they called in for medics. They got me immediately to a hospital in Frankfurt, he said, so that it had a long flight to get there. And he said, even though my right ear was blown completely off my head, I still have 100% hearing today in this right ear. And we were looking, and I couldn't hear any more of the story. I said, Mark, back up for a minute. You had your ear blown clear off your head, and you have 100% hearing. How is that? How is that even possible? And he said, well, one of the guys in my troop picked up the ear and put it with me, and they got my ear sewed back on, and they were able to repair it to where I have 100% hearing. And I said, well, how in the world did somebody in this environment with bombs going off and an enemy that was obviously close around, how did somebody have the wherewithal to get your ear and put it on your person where you would have it at the hospital? And he looked at me and he says, that's what we do. We train for that every day of our lives. When a crisis happens, when a landmine goes off, when somebody gets shot, we know exactly what to do. They found that ear. They looked for the body parts that were blown off. They taped them to my body. And that's why I'm able to hear today. When a crisis happens, we're trained to know what to do. And I came back and I looked at everybody in the office and I said, you know what? For our people here at Keystone Financial, I want to make sure for every one of our clients that they know when a crisis happens, we've got a plan already in place for what to do. I want every one of them as secure as these men in the military are. I want them to know that when that issue happens, when that crisis comes up, we've already got a plan in place to know what to do. And that's what we do. And it changed our culture here in our company. And that's how we live today. And it is a neat environment. It's a unique environment. But our clients will tell you that in that 99% retention rate, they're here for a reason. And they know when these crises come up that they've got a team of people around them that are ready to go, that already know what to do, that had the plan in place already preemptively, and we're just going to work through the plan. So remember in the early part of this, when I told you that there were two types of people Out of this 90 percentile of women that realized they should be taking a more forward role in their financial planning, there were those that realized that, but they did nothing about it. And then there were those ladies that realized that and they took action and did something about it. If you're one of those ladies that has realized, gosh, I want to take a more active role in my financial planning, that's me. I want to take a more active role in making sure that all these things are in place so that I am able to not be kicking myself that I didn't save enough, that I didn't plan enough. I want to have that great retirement. I want to have that great life in front of me. If that's you, then here's what I want you to do. We're giving you an opportunity off to the right-hand side, and there's going to be a button there that you can push. And when you push that button, it's going to schedule and give you the opportunity to schedule a 15-minute phone call with Glenn or myself. And so you'll be able to put that right into our schedule. We have a whole team that's just going to work on making sure that every one of those gets honored with you. And in that 15-minute phone call, we make no assumption that because we talk together on the phone that you're going to be a good fit for us to work with or we're going to be a good fit to you. Okay? But what that 15-minute phone call is for us to give our very best to help answer you ladies' questions, get you in the right direction, find out what your needs are, and to talk further if appropriately. But I want each of you that has realized that you could be doing something more to take that action, book that 15-minute phone meeting, and we're going to be delighted to talk to each of you. I hope that you got something out of this evening. I enjoyed being with you, and I look so forward to talking to each of you in the coming days. Have a great evening.